So generally, people refer to fintech as anyone that just moves money. But we all know that's not entirely what fintech is all about.
What were you obsessed about that made you say, let me build BrandDrive to solve that problem?
Data. Because we understood that the key strength of any business at the end of the day is information.
What do you think can make a difference between a survivor and someone that's skilled?
Resilience, for one. So scaling is also a fragment of not just revenue, but impact. I literally jumped on a video call as soon as I was right there, and I was like, can you see, like, so we had the particular customer had like a shelf stockpiled with receipts. And then I asked, can you tell me what, just give me like your highest sale number last year. And this guy was literally flipping through books. He was patient enough to indulge me, right? But it took a while for him to just find that information. And that was over 20 minutes that was cut to less than 2 seconds by the time you basically onboarded on BrandDrive.
That brings me to this question. Like, there's a lot of startups in the fintech space that are closing down with customer data and with customer basic M&A with an existing business that exists in the market and is able and capable to serve those customers exist. How do you see that ecosystem play out? What do you think is causing that behavior?
While there's a lot of things that happen behind the scene, you wouldn't really know. Both happening with leadership in terms of founders and their management. But I think for every business, especially within the fintech space, it's like a core responsibility that you owe to your customers. Businesses start, businesses fold.
Now that brings me now to the question of fundraise, because a lot of founders come up with so many go-to-market strategy that are like, they're like a game of attrition.
When to get fundraising should be when you have clarity around how you intend to use the money.
Ndu.
Hi.
Thank you so much for taking all the time.
Absolutely.
So I like to start with a little bit of an intro. So you permit me to brag about you a little bit.
Okay, fine.
All right. You always say like you're a designer by like instinct. Would I say instinct? I think there was something you said on one of the podcasts you had previously about being a designer.
Mm-hmm.
And Ndu Ekwomadu is the co-founder and CEO of BrandDrive. You are BrandDrive is a Nigerian fintech company.
Yeah.
Providing building business management tools, and that empower small businesses with a focus on simplifying finance and commerce. You're one of the emerging forces redefining SME fintech in Africa. Is that right?
Very true.
Right. Your journey captures the realities of scaling in a competitive marketplace and navigating the complexities of partnerships, fundraising, and innovation.
Yeah.
All right. You've built like BrandDrive as one of the most in this competitive space. I will talk about why business was competitive a lot. So,
okay.
Where survival, in my opinion, is now considered as a new success.
Okay. And
I think the opening question will now be, how do you build? Before we get into that, I would like you to introduce yourself for those who may not know you.
My name is Ndu Ekwomadu, founder of BrandDrive. I started the first company called Hemdall before BrandDrive.
Everyone keeps forgetting.
Yeah, everyone keeps forgetting. Yeah. Well, it's interesting how some people used to know me as Hemdall before, and then now BrandDrive. It's quite interesting. BrandDrive has basically been our focus and maybe for the past 3 years now. We're focusing ourselves as an African operating system to empower business to grow, covering all the arms of sales, bookkeeping, payments, but more importantly, or more interestingly, more recently now, we're looking at how we can position as a force from artificial intelligence. How can you be able to make better decisions as a business owner? And in your words, within a competitive, disruptive landscape, whereby technology is moving very fast and you need to make sure you catch up with the rest of the world.
Cool. AI is quite interesting as a differentiator in the fintech space. I was in Lagos, right? And the biggest conversation we kept having around the cycle of investors and what kept coming up was the idea of fintech.
Mm-hmm.
And the fact that everyone believes that the fintech market is saturated in Africa, in Nigeria specifically. And that opinion, would you say that, have you ever felt like that opinion was like projected on BrandDrive at any point in your process of building BrandDrive?
Yes and no. So generally, people refer to fintech as anyone that just moves money, but we all know that's not entirely what fintech is all about. For us, for example, BrandDrive will be heavily focused on financial inclusion, focused on data, and how that basically affects even your business. At the end of the day, business is heavily centered around money. And whether we like it or not, yes, you can basically focus on moving the actual money, but there are a lot of other variables that matter to that money. The data that matters, the intelligence that matters, how will you basically, all of the in-betweens. And those are the intangibles that we're basically focused on with BrandDrive. So initially, we did have that set of feedback and people will say, oh, another fintech. But again, when you start looking a little bit deeper than what you see, then you say that, oh, we're not a regular fintech, as you'll say.
What were you obsessed about that made you say, let me build BrandDrive to solve that problem?
Data. 100% data. Like, we were very, very concerned around how money moved than even the money itself moving. Because we understood that the key strength of any business at the end of the day is information. You're only as big as what you know, the access to different things you needed to do. And what BrandDrive was basically doing was providing that level of excessive insights for you to be able to say, you know what, I can be able to be armed to, when you think of taking a loan from maybe from a vendor or from a partner or from an investor, as the case might be, you can be very confident on what you need to do because you have that data. So think about it as having a formidable force or a shield for you to scale and grow your business. And for us, that's what we're very obsessed about. And we've seen how that focus has basically helped a lot of businesses succeed.
So now that means that BrandDrive now is at the intersection of like finance, then data, and now AI. And before we even talk more about some of the questions I have, like what is the AI element to BrandDrive?
So think about it as a way you would pretty much say your Siri for business. It's heavily embedded within the infrastructure, not just as an agent, but basically to understand what's going on within your business. Think of it as a partner, but it's called Nivram AI. So Nivram basically just focuses heavily on how do I help you as a business owner scale better. But then it's looking at all of the nitty-gritties, from how you're making decisions around finance to how you're spending money to what's coming in within the business, and optimizing all of those edges so that you can say, you know what, I can make this business grow and I can stay in business at the end of the day. Because most times we're seeing how a lot of businesses are shutting down, right? And while there are other variables that matter, but you want to make sure at least the angle that has to do with covering your decision making is heavily fortified. And that's what Nivram does. It helps you make some of those very specific decisions that helps your business grow.
Well, I was speaking to a founder some while back. I won't say a founder because founders can be regarded as, like you said, technology. I was speaking to an entrepreneur,
yeah,
or a business owner, and then I decided, okay, send me your financials. I said, did you know that you transact about 50 million a month? And it was like, me? Yes.
Yeah.
You transact about 50 million naira a month. Yet you're looking for 20 million naira loan. I don't understand. Where exactly is the 50 million going? And that is what, like, the fragmented situation of like multiple financial platforms. Like, you have GTBank app, you have this, you have that, and you're doing transactional all over this place.
Yeah.
And you don't have like visibility
exactly
across your money. So it's difficult for you as a business owner to know from the glance of things. I make 15 million a month in terms of income. How do I make sure that where is the money now going to?
Yeah.
And I make 49 million in terms of spending.
Exactly. Profit is always the sweet spot.
Exactly. So I think it's now clear. Many people have spoken to about BrandDrive. Say BrandDrive is not just fintech. Understanding that the missing point is the data.
Yeah.
and many people don't understand a lot about it. There is something I was experimenting with, which is the White Black Friday way. Shopify. The Shopify agent can literally look through your inventory and create Black Friday bundles.
Yeah. So specifically picking out what are the things that have done well. And it's way more better. Maybe you've used Shopify for, let's say, more than a year. So it basically can tell that pattern over time. So it's not just looking at it for the course of a specific, maybe a few months or so, but it can tell the trend happening over time. But even within a short period, if you have a platform similar to what we have at BrandDrive, and it's similar to some of the customers that we're having the same situation right now. They're getting feedback around which particular products you want to push forward, which bundles you want to push forward, or which group products or variables you want to push forward. And that advantage makes that you clearly understand why you should probably decide distribute at this price. So even if you're beating down your price by even 70%, you clearly understand that your margins will cover, because at the end of the day, you're having so many others. And those are the things customers are looking for. And at the end of the day, you make a lot of money from that.
Back to the question on the fintech space.
Yeah.
Everyone tends to talk about it like there's a competition. And there's a situation where there are survivors and there are those who scale. Right. Before we talk a bit about that, what do you think could make a difference between a survivor and someone that scale?
Resilience, for one. So scaling is also a fragment of not just revenue, but impact, right? If you set out to do something within the business or an industry, you want to look at how many businesses or individuals, depending on the specific, if it's a B2C or B2B, are benefiting from that specific core of what you're doing. So for me, I think impact will be one of the key metrics to look at. Of course, revenue is a very major one, but indirectly, you want to look at the impact from a growth standpoint. But if you're staying resilient, even when times are a bit tough or business doesn't go exactly how you expect it to be, you can navigate through those weathers, and then at the end of the day, still stay. Most of the big giants we're looking at today, most of them definitely all had periods like where things didn't necessarily look, extremely really great, but the ability to go through that phase, go through that storm, and come out at the other side a lot more stronger and better. That's everything.
Looking at the story or the lifespan or the timeline, that's the word, timeline of products like Flutterwave, right? We've seen that Flutterwave actually started as for dev-only product, where it was heavily dev
focused, yeah.
And then transition from dev to large-scale enterprises. So like large-scale organizations using the platform. And then we saw the advent of the Flutterwave Commerce trying to now attack the mid-sized
small businesses, yeah.
And then we're now seeing Flutterwave in the startup space as well. If you go to the website, you see the startup. Then you have products for startups.
Yeah.
And that got me thinking, we've seen the transition of BrandDrive as well. When it was BrandDrive, the origin logo, that's BrandDrive. That's how you describe the difference. And the one question that came to mind is, how do you balance the product development, like the transition of the product development? Because BrandDrive last year didn't have AI, right? And now it has AI. And then some of the things we've spoken privately about are some of the strategies you use to grow the business in terms of numbers. And how do you balance the product development with the growth, in very competitive space like this?
I think most importantly, we're building for our customers. So when you spend enough time listening to what customer pain points and what their needs are, it helps a lot. I'll give a very easy example. So we rolled out, just prior to we even rolling out Nivram AI, we rolled out our OCR. And the simple, most important reason why I wrote that out was I basically came to Lagos. I was basically like a round trip across the country. It was in Lagos. Shortly afterwards, I went to Enugu, and then I went to Onitsha. I spent about 4 days, especially just in Onitsha, not to do anything, but I just wanted to meet with a lot of marketers. And you will meet a tropical Onitsha man that probably sells styles, and this guy is moving. In terms of sales, they're probably doing like a bad business day is like 5-point-something million a day. Like a very bad business day is like 5-point-something million. And the problem they have is every single time when maybe a gadget store similar to the same target, they're literally almost on the same lineup, like in terms of shops, they will always have a normal manual receipt. You know, the normal one, you have the whole print and all of that, but they want to adapt into digital methodologies of doing things, but they still feel like, you know what, there some of their customers will always resonate with saying, you know what, I want a manual receipt that is handwritten and signed or something like that. So
especially for high ticket purchases.
Exactly, for high ticket purchases. So we went back, thought about it, and then we rolled out our OCR. It wasn't even about a month or so after that. And we saw a crazy spike in that. And I was like, you know what, let's figure out where exactly this spike is coming from. And for some interesting reason, one person used it, it worked for him, and decided to introduce it. So just for context, the OCR is basically you just saying you're scanning your receipt. So you have already existing receipt. You just scan it with your phone and it converts it to a digital receipt and records it as a sale for you. So think of you saying you have a whole booklet of maybe 50, 60 receipts, and you're scanning it through in pretty much less than 10 minutes. You're doing literally the whole booklet in 10 minutes, and you have all of your sales recorded and digitized for you, and you're getting feedback from that. So, and that was a remarkable advantage for them. So I put a call across, and the feedback from that customer was remarkable, and he couldn't just help but share the same joy with his friends, and that's how we had the spike. So other people started using it as well. So for me, I would say that for us, our growth trajectory and our innovation has strictly been by listening to customers first. But at the same time, we pay very close attention to the way we want to disrupt, right? So we've always had Nivram. So for context, Nivram was literally the first thing we built.
Wow.
Yeah, Nivram, we built to Nivram first. It was literally one of the first round of code. But at that time, even ChatGPT wasn't rolled out.
Just like procedural chatbot.
Yeah, so we wanted to always build a business intelligence tool, but we felt like the world hasn't, even Nigeria specifically, hasn't adopted to. If you speak about AI, everyone feel like some buzzword or something, right? So we wanted to be able to say, you know what, let's give it time. So we came back, tracked back a bit, focused so much on bookkeeping, helping people be able to say keep digital records for at least for the basic part of it, right? And now the world has caught up to that part. Everyone can resonate and understand when we say you want to have AI embedded within your business, they can understand the value, and they can resonate with that. And so the timing became very perfect for us. So it's just the same thing as saying some kind of innovation sometimes needs time. You need time for you to catch up with what you want to do.
Bad timing, you would just look like
exactly.
But then good timing, everyone will like, the solution to all our problems.
Exactly.
It's something that you said that was quite unique. And to put it in simple terms, a good product is a good marketing tool in itself.
Sure. Yeah.
Right. And the question where people try to divide between product development and business development as a two completely differently, where they say, oh, we need to cut down on dev because we're running out of money because we don't have enough customers, so we can focus on generating,
sales,
generating sales from customers. But what you said, you just like, we decided that our solution was to go find what customers' problem is by observing and solve that, and that's basically business dev. So you've done.
Sure. So we did want to take the initial route, but again, some of the advantages of having done this before. I've seen that doesn't always work out. You can, yes, take a pen, as they say, and just, sell it. But when you look at the long run and you want to dominate for a long time and you want to basically stay thriving, you want to have the stickiness with customers, you want them to love what you do and not be able to do without it, because ultimately that's what we're trying to create. We have a very strong, basically our North Star metrics for us is daily active users. So we watch out for saying how dependent are you on our entire infrastructure, and that's why we call it the operating system for African businesses. So we want to make sure that, and that's if you don't focus on the product, you wouldn't get that, because yes, you can sell to someone, they basically onboard, they use it for a few months, worst case scenario, but then they churn, and then you don't want that, because in basically deeply rooted within that retainership or that ability for them to keep on staying on the recurring, that's a bit most important advantage.
Wow. Let's take a step backwards. And there's some things I wanted to talk about that is a massive contribution to like the success of any startup. And whenever in private, whenever you speak about your co-founder, you tend to say it with a smile on your face.
Oh yeah, always.
Right. And not every founder has that experience.
Unfortunately.
And in the Fintech world we find ourselves in right now, we've seen a lot of closures. And while there have been stories that try to justify it, it's just been a founder relationship problem. right? Over the years of constant iteration and changes, how have you kept that relationship to your founder to the point that you are still able to be building?
Yeah.
For context, there was a time where you were trying to raise,
Uh-huh.
and it felt like a bleak period. Like, oh, if we don't,
Nothing was really happening. Yeah.
yeah, right. And it was like a story of we raise money, get customers, and how do we balance it too? And from experience or from also interacting with a lot of founders, that's been like a massive breaking point.
Yes, it is. It puts a lot of strain on the business and also on the relationship with the partners.
How do you guys navigate that to where you are in right now, where you could figure out, oh, we found a market. Before we even talk to me about that, because we found something that is a unique differentiator for the product and now sticks to customers.
So the way we started out, first, I think just to give context, it's important that it's not necessarily to say your friends, but it's important to always have that genuine handshake. So when we started out, I was doing a lot of the shielding, for lack of a better word. Just, focus on the product, focus on development. You don't need to worry about everything. Put like a veil on the reality of certain scenarios just to make sure that you don't panic. But very quickly, I realized that doing the complete opposite was what was necessary. And that was because then being very transparent around what was going on, being very vulnerable specifically, right, around what's happening within the business. It can be a make or a break. Some devs will most likely just chicken out and just, jump ship and be like, nope, I can't do this. But I think it gave us the opposite result because it also meant that to him, he took it as I respected him a lot. That was for one. And it also meant that I trusted him with the truth. Not that I was lying to him before, but it just meant there were a lot of things I wouldn't reveal. For example, if we have a bad business month and maybe we couldn't even pay salaries, I would just figure it out. I wouldn't say, oh, you know what, business is not thriving so much now. No, we'll just focus on making sure we develop these new features. But taking that narrative, that was basically for our first year, just for context, right? So after the first year, I saw that same stride help us really elevate well. So it meant every time we wanted to take a big jump or we wanted to pivot, he was definitely always within that conversation consistently. So the only difference is we're just taking different roles. But in decision making, in execution, in thinking around the process and delivering, and also taking the risk to make sure that, if this doesn't work out, we can go back to the drawing table and say, let's sketch it back and do something else. Always we're doing the same thing. So for me, I think that gave us a very strong advantage. But more importantly, the fact that you always have to, so there has to be this collective edge that both founders need to always have, right? Because you're both looking for the same thing. As long as you can clearly define to say, we both want the same thing. We might have different methods around that approach. For example, he would be one of those kind of people that you say, if someone on the team is not delivering when they need to, you're like, we don't have to waste our time on that. But I might take more of a diplomatic approach to certain things, take more of a strategic approach. And then we found a very important balance around our culture within our team. So always finding that balance, I think, has always helped us consistently.
One reason why I brought that up is that you went to Onitsha.
Yeah.
You found something that could be a massive differentiator for your business. You said like a no-brainer, right? Oh, take a screenshot of, take a picture of the receipts and obviously, if you knew what, like the technologies, capabilities of 5 years ago, where the system to capture image to text weren't as effective as it is today.
It is, yeah.
Right. So there's a perfect timing for the technology, perfect timing for it to be more efficient and all of that. But the most important thing is that you said was that you got that idea and in less than 2 months, you got in the product to market.
True. Yeah. A month, actually.
A month?
Yeah, a month.
And a month, you've gotten the product to market, just works fine. You've gone back.
For context, I literally jumped on a video call with him as soon as I was right there. And I was like, can you see, so we had the particular customer had like a shelf stockpiled with receipts. And then I asked, can you tell me what, just give me like your highest sale number last year. And this guy was literally flipping through books. He was patient enough to indulge me, right? But it took a while for him to just find that information. And that was over 20 minutes that was cut to less than 2 seconds by the time you basically onboarded on BrandDrive. So for me, most times I feel like why I just make the call straight away, and I do that all the time. I'm like, see, you need to see firsthand what is happening, because while yes, he's deep within our infrastructure, ensuring our security and growth and all of that, sometimes I'm right there with these people, right? The rest of the team sometimes always there, and it's good to always have that reality check. You can't build so far from your customers.
You can't build so far from your customers. That brings me to a very important question that has been on my mind, and I think last year we had this conversation about it, where we see some startup like massively acquire customers and not being able to serve them. And we see a few M&As in the last 3 years. We've seen Payday merge into, totally forgotten the name of the app. We see some other startups like just close down without merging.
Yeah.
And, you know, that brings me to this question. Like, there's a lot of startups in the fintech space that are closing down with customer data and with customer base that a basic M&A with an existing business that exists in the market and is able and capable to serve those customers exist.
True.
You know, how do you see that ecosystem play out? What do you think is causing that behavior?
So I think while there's a lot of things that happen behind the scene, you wouldn't really know. Both happening with leadership in terms of founders and their management. But I think for every business, especially within the fintech space, it's like a core responsibility that you owe to your customers at every given point in time, to be honest around what is going on with your business. If genuinely the business has gotten to a threshold whereby you can serve those customers, it's very okay. Businesses start, businesses fold. It's never really, we're most likely not going to be the first that will experience that or the last, right?
Yeah.
So I think it's just, it's the most honest and fair thing to do, to say, you know what, you trusted me with, you know, your data, your money, as the case might be. So I want to make sure that I close right. Those can take different shape and approach. It can be, you know what, I'm giving you an opportunity to say, you know what, you have enough time to exit whatever it is you have and make a transition. Or I'm saying, you know what, I can put you in the safe hands of someone else, if that's even possible, because most times it's possible, sometimes it isn't, right? But you want to be able to explore those options. But ultimately, I think communicating with the customer is really key, rather than just doing tada kind of thing, right? Yeah, and that's not good.
Like, I think when Payday was closing, I had like transactions because I'd used Payday a lot for like corporate purchases at the time, using foreign card.
Yeah, cards was a very major issue. Same here too.
Yeah, so one of the biggest thing was like, okay, at the end of the month, I can get all my transactions there and send them as
invoices.
Invoices to the guy. The finance guy can confirm the transaction. Sometimes, you know, the biggest problem was just the data.
Yeah.
So, you know, I'm closing my startup down, take your money out in 30 days. That's not the problem. The problem is the fact that I have spent and invested 6 months, 1 year on your product with my data.
Yeah.
And, you know, I think, you know, we could both agree that it's best that if a founder is thinking of closing down, look for a partner that you can transfer those data to.
Sure.
If you really do care about the customers you're serving.
Yeah.
What is your take on the next wave of fintech collaborations? How do you see that?
So I think we're in a tussle now where everyone now is, you hear people say things like, oh, we're tired of fintech, but technically they're tired of payments. Yeah. Right? Because the whole idea around payments is not necessarily to say, you know what, I can fix payments from within Nigeria or globally.
Yeah.
Similar to the same situation where you have with PAPS introducing payment infrastructure across Africa.
Yeah.
But I think what fintechs will be forced to do now is also the benefit and the downside of an evolving industry really fast is now everyone basically has to think around, especially everyone within fintech has to think around, how do you stay very valuable to these customers, but how do you also disrupt? Because there's a lot of call it being slow to innovation when it has to do with the industry. No one is thinking outside of the box around some of these things. A few people are, and that's also what we're trying to do. We don't see ourselves as the best, but we want to make sure that we're basically trying to count ourselves within that picture, because there are a lot of problems. Private base, business base, individuals, different industries, and fintech has a way of covering very key angles, because for whatever industry you want to look at, money must exchange hands, right? Data must exchange hands. So you want to make sure that fintech is evolving in a way whereby I think more importantly, data is being shared, because I think that's probably another angle we need to look at. We have so much data in silos, individual infrastructures, all independent, they're not talking to each other. Think about the ages before InterSwitch, where banks couldn't necessarily use one another, and see how beautiful it has come to play. From you say, you know what, you can take your ATM, go to your ATM card, you take a bank card, your debit card or expense card, and go to any ATM and withdraw. But that wasn't the case a while ago, right? So we need to look at how data can be shared across fintechs, from not just about bad actors, but even say, you know what, I've done something with this particular bank or this particular platform, and my data can be shared across platforms, and that becomes another advantage for individuals or businesses. So I think that's what we should be looking at.
Someone asked a question that at the time I thought was very silly. It was like, oh, Paystack, I don't know, from PiggyVest, why can I use my PiggyVest to take a loan and say, hey, I've locked my money in PiggyVest for a year plus, and I want to
do something.
I want to take a loan against the money I've locked, because you can see the money is there. And that was like, wow, that is like cross, relationship. And the first experience of cross relationship outside of like the banks,
it's literally collateral of his own.
Yeah, it is. Outside of NIBS and what we have to do, which is perfect, which is great, which is something that we're happy about. One of the cross relationship that happened was the days of this app that became Pocket, that was purchased.
Okay, I beg.
Yeah,
became Pocket. Yeah,
that became Pocket. Like the conversation was just on Twitter. Can we send money from my Pocket to my PiggyVest, and became and it happened.
Yeah.
And then that was my own explanation. That's like what I think like collaboration needs to be across platform, across apps. And another platform I seen that is doing that is the relationship between Mono and Flutterwave, where direct debit is being managed by Flutterwave on Mono, and you can see it written on the website there that is by Flutterwave. Like those are the kind of collaborations I see that kind of give me joy when I see them.
True.
Outside of the infrastructural, like the cross bank transactions and all of that. One other very big thing that I would like to get your perspective on, or how you engage it with it, is competition.
Okay.
Right. Your BrandDrive has multiple verticals. You have payment in your product. You could also be considered as a SaaS product, where people pay monthly subscription to access the tools on the platform.
Yeah.
And then you also provide a way for businesses to receive payment, either through the platform or through physical devices as well, right?
Yeah.
So that means you have multiple verticals within BrandDrive.
True.
Right. As a whole, how do you see interactions in the market and competitions? Now, let me give you context to that. We see a lot of people playing the drive to the bottom game, where they try to drive price down. Or our fees are better if you come to use us. We'll give you guys 20% discounts if you use our platforms. And when I see that kind of competition, I just feel like you are not competing based on value, you are competing based on price. How have you played?
You've basically more said it all. So competition is always based on what strategy or what narrative you want to take. So you can compete based on value, you can compete based on price, and you can also compete based on innovation. So the value can be also misinterpreted for innovation, because the value can just be the pain point, simply that, right? But you can also say, you know what, I'm disrupting this entire industry. I'm breaking the boundaries of what people even know and exists, right? Into something very different, but it will be useful for them. They've not thought about those. They've not thought about those solutions. They know they probably have those problems, but they're not thinking around this is how it could be solved, right? So think about the way. Back in the day, if you're probably hungry and you want to eat food, you probably think of the nearest Chicken Republic or the KFC. You have to walk into a store. No one was really thinking about the food can come to me, right? And then we had e-commerce. Konga came in, Jumia came in, and then of course Jumia Food came in, and then other players, and now Chowdeck, right? So, but now everyone can. No one really thinks. No one think of the hassle, for you to say, you know what, how do I get the meal that I want once I come into a new city? I don't need to bother to know where is the nearest restaurant. I can come in at any point in time and I can just order my meal and it's going to come to me. So that is a new level of disruption. So for me, I think where the biggest advantages will be for competition for us, we're just taking two, which is value and disruption. From a price standpoint, we've tried to stay fairly affordable just because we understand the realities of doing business within Nigeria and Africa generally. However, we try never to think of things that way. I think even more recently, we're having a discussion around, we've left Nivram. We did a private launch of Nivram, not publicly or maybe big event or anything. Sampled it across about 200 to 500 customers that we've gotten actual good feedback, and we've seen how viable and useful it is to them. And we had a number of interesting introductions. For example, now individuals can pay their taxes. That's supposed to roll out in January, but we basically had that already built. So now you can pay your taxes, because what's going to happen next year is going to be a nightmare for a lot of people.
Yeah.
And want to make sure we can put that value in. So we're basically looking at a number of things and saying, do we really need to consider a price change at this point? Because we've kept this price for the past 3 years at what it is, despite all the currency fluctuations. When we started out, currency was literally at 500 FX rates.
Yeah.
And it's been like that even at 1,500 now. So we're looking at the current realities and saying, you know what, while we're not going to, again, skyrocket the price, we need to look at the realities of doing business and look at the value that we're providing. But more importantly, we're also looking at how we can disrupt as well.
Disruption and value. So basically, that is the reason why if you're just doing payment, you can only fight based on transaction fees.
Yeah, that's all
you don't have any other.
There's really no other way.
There's no moat anywhere.
Yeah, because there's already a cap on what names will give you, or the CBN would allow as a regulated. But so you can't inflate that. So you're basically fighting based on volume. And you can only deal with people moving volume when there's money. So if people don't have money to move, there's nothing you can really do about it. So now you're not banking on economic growth to say, you know what, you have people are earning a better living and things like that. And that's a lot of hope that it's not good for business.
Hope is not a strategy.
It's not a strategy at all.
Hope is not a strategy. Like, I was speaking to a founder, you sent me his pitch deck, and I said, how do you plan to grow? He says, go to Dangote it.
Oh, wow.
You know the Dangote strategy of like, how you did the cement, how you did the rice, how you did the spaghetti, how you did...
And I hope one of them wings it out.
No, not like that. Like, okay, let me just give you a break. So Dangote strategy, like salt, for example, you get into the market, there was Annapurna salt and Annapurna salt. You know Annapurna salt? Yeah. That was the salt I knew as I was growing up. What they did was like, they basically brought the salt and dropped the price. And every single day they dropped the price. Every single month they dropped the price. To the point that our allegiance to Annapurna salt started to look like questionable at the point. Right? We got to supermarkets and you see Annapurna salt.
And you just look at it, then you just... Let me just take this.
Let me just take, like, I can...
It's always like that,
like, it was the day I switched to Dangote salt was the day that the price of one Annapurna salt is 2 bags of Dangote salt of the same size.
Same size.
So I stood on the aisle and I read the ingredients and the bags. They're basically the same thing, And I felt so bad that day, but it was just a logical decision.
So realistically, to be very frank, I wouldn't necessarily always discredit people that shoot the price down. But when you do that, you also want to look at the reality of you doing business. Are you liquid enough to go on that kind of challenge?
And competition.
Because let's look at practical examples. Wave apps, they decided to literally put the entire product for free for a long time.
Same with InDrive.
Yeah, same thing with InDrive. So you want to look at, you must definitely look at capital that the business has enough to weather out that period for a very long time. And then of course you want to have a plan to still monetize, right? Same thing Facebook did, and then had advertising as the waiting game for that. So while it works in certain models, I don't think it does in every model, right? So you want to look at the business model. You also to look at the realities of where you're even doing business, where also matters too.
One other variable I've noticed is the fact that how many competition do you have? Like the issue with salt, they were not up to 10.
Yeah, exactly.
So you could kill everybody,
realistically,
and then when they're out of the market, you could bring
just
the
come
price
back and no one will cough.
Nobody will, but like,
which is exactly what happened with cement, though.
Exactly. So your competitions are not enough. If your competitions are too much to play that game,
then you
will lose.
When
InDrive did this, they were just two big guys in the
Mhm,
market,
Bolt
Bolt and Uber,
yeah.
so they could do the same, right? And so, yeah, that's a very, very important. And that brings me now to the question of fundraise, because a lot of founders come up with so many go-to-market strategy that are like, they're like a game of attrition. All right, where they just send their army to the war and say, just keep going. Eventually, they run out of ammo.
Yeah.
But meanwhile, you are the one
Yeah.
looking for,
It's heavily capital dependent. Though.
Every capital dependent, and then at every time you are killing you're ending your capital, you're looking for reinforcement. Every time you need reinforcement. So
with the hope that we get somewhere, we now meet the enemy, we take all of the ammunition and we win the war.
and then there are many stories in history where at the end of the war, both of the people are lost.
True.
The enemies have lost everything, you've lost everything, and
no one wins there.
So let's start before we even get to this point of like how do you now do it in terms of growth. It's like how do you as a founder, I'm saying this because you fundraised, right? And I will say that your business is still alive and thriving, right?
Yeah.
So we've seen 2-year-old startup founders have, decided to pack up shop because their business is not. So let's start from the beginning. Fundraising. What is it like? When do you need it? And how do you go about it?
For us particularly?
Yeah, from your experience.
Yeah. So for me, I would always say when to get fundraising should be when you have clarity around how you intend to use the money. Most times I wouldn't advise is the first thing you want to go for. Even with an experienced founder, like realistically, yes, you might have the experience. You probably may be doing this for your second time, but you want to put some level of capital of your own, right? And the question now comes, what if I don't have? Then look for, work for someone if you need to for a while, do something else, raise from friends. But once you start looking at angels or proper VCs, I don't think that should be the first thing. It might look in the moment as the most important thing to make things, kick off the ground, or the momentum you need to, realistically scale. I also think that there's also a context to look at depending on the nature of the business. So if you're looking at the business that requires licensing, and the number of variables that goes into some serious figures, then there's really nothing you can do about that. So you want to kind of figure out how you want to go about. But when you can do without that, you want to look out for measures that you want to focus on the customer. Have clarity, have some level of viability around who is going to pay you. And then more importantly, when you have clarity around where you want to, because you want to test those variables. So think of it as a sample format for you with your money on a very small scale. So the moment the funds now roll in, what you're just doing is whatever you're doing that times whatever it is, times 10, times 20, and then you're amplifying that, but you're not using the money to experiment. And that's where the mistake comes.
Yeah.
So most people are experimenting with fundraising. And as much as they're doing it with good intention, they have no ill intention. That can be where the major problem is.
There's a saying that fundraising takes you away from your startup.
If you're not careful, yes. Right. Raising funds on its own can be a full-time job. Right. And then when you get the fund, you're either caught between, if you don't have a lot of discipline, you're caught between saying, I can ease off now. But realistically, that's when you need to be way more on your toes, right? Because now you have someone's money in your hands. You need to literally figure out how do you want to, X this by whatever means possible. And even if you're not growing exponentially as fast as you need it to be, the point is you have a plan that whatever it is you're doing, you have a strategic end goal. And that's what's more important. Clarity, I think. So for any founder trying to raise, I think clarity is very important.
Clarity. Now that you've clarified, I have clarity now on the fundraise, like the process. How do you go about the first idea? How do you go about the first fundraising plan? Who do you speak to? How do you...
Knowing what I know now, relationship is the best. And that wasn't the route I took anyways. I was just lucky, to be frank. I did one of you send 1 million emails and just hope one of them, and of course you get loads of no's. It also meant we went right, weren't very, very prepared properly then. But at the same time, I've also raised from a relationship based standpoint. So we've had a proper institutional accelerator, and we've also had an angel, and I can tell there's a world of difference between them.
Yeah.
There are some level of investments that give you the advantage of knowledge. For example, like having to go through the Babab network, that gave us a whole lot of knowledge around, not just around how business works or industry works, but also understanding the nitty-gritty and the core of our business. But there's also a different type of raising, whereby it's relationship with people, and it doesn't take so much of a constructive or formal approach.
Yeah.
There's just you're just literally looking at someone else who just probably who's willing to race a little bit with you, and they look at it from a partner standpoint. So think of it as an extension of the way you have your co-founder, but in this case, it's also an angel or who's going to fund you. So, but what that means or what that does for the business is definitely you get capital, but it also means that there's a level of understanding. In certain cases, the advantage of what you might get with certain people might be, and I think that clarity also extends, the one I spoke of before, it definitely has to extend to understanding what you're getting out of that investment. Are you just getting cash only? Are you getting cash and access? Are you getting cash and maybe the possibility, maybe not necessarily access, but does it give you the nuance of saying positioning? Because there's certain venture capitals that you can be associated with. By just being associated with them, that itself is and value for you. So you want to some kind of look at some of these things. Why are you going after certain people, or why are you taking certain checks? There are founders who have taken very funny deals. And I always use the word funny deals because on a realistic level, that's not good for business. They're really eating so much within their cap table, but they've chosen to take some of those deals because they've given them some level of relationship that they believe that I will leverage on this relationship, and that will give me the access that I need to do whatever it is I want.
Yeah, there's this conversation about we have concluded the era of growth at all cost, where funding access is easy for founders that says we want to grow, and not care about profit.
Yeah.
We're now in the era of profit-focused growth or growth-focused growth, like yes, direction of where you're going to make money from growth. How have you seen the ecosystem change, regards to this changing ideology?
It's a good eye opener. I think it's long overdue because growth can mean different things to different people. Some people can just be focused on growth. That just has to do with how popular the business is, how much. Yeah, exactly. How much. Once I mention my name, right? So. But then you would also see that there is the same idea when you look at some SMEs, right? You will see a big fancy restaurant, right positioning, maybe on the major road and all of that. And there's this other lady that has a small booker within the market, and maybe they just have like a 12, 16 seater, and it's always full. And that's not literally people that are buying and just taking away, and they're bagging millions every single day, right? So profit now has literally become a very important part of any business. And I think that's the way everyone should think around it, because we're in business to create value, but more importantly, to basically make money, right? You can't be generating loads of revenue and burning through your expenses, and you don't look at the in-betweens. That doesn't happen.
Now, like, when the founder will get to a stage in your company where they feel like we've nailed down the product, customers love us, people love the product, we are having the lowest churn rate you can ever imagine in the market, we're having a growth rate. At this point, I think it's time for us to actually now scale, right? How do you process that? How do you process that in your mind and I'm ready for this? How do you know that you're ready?
The data will tell you. So it's not a gut feeling thing. It's not a buzz. It's not vibes, right? So
it's not what your investor told you.
No, it's not what investor told you. It's not even what maybe, you want to feel like, you're telling yourself. No, none of that. You want to go back to the data and look at it historically over time. You want to basically say, what, this is where we are, this is what we're doing. And what was happening at that point in time? What was the market looking like, right? What was happening generally within the industry? What times were we living in, right? And then you look at the growth trajectory, and then you can, so think about it. Let's say you're starting business at a point in time, or you're doing business at a point in time where population, just for conversation's sake, as an example, right? You have, let's say, 20 million businesses within that particular maybe city or country, as the case might be. And you get to a different life cycle, maybe 2 years, 3 years down the line, and there are now maybe 100 million businesses that are doing within that same community. But you feel like, you know what, we're serving these 20 people and that's really good, but the times have changed. So are you really covering that much of customer base compared to the general public? Have you really served the number of customers that you should serve? You're doing well. Everything looks absolutely great.
Yeah.
The 20 million customers you have, they're solid, right?
Yeah.
But have you really covered, because now population has grown, the more introduction into that particular industry, and you're basically at a key position within your business, but you're leaving a lot of food on the table. So I think data would help for any business that wants to basically make a decision around what they need to do. They basically just need to look at what's going on within the business historically, analyze that data. If you don't have key team members within your business, get experts that can help you look at that. It will save the business a whole lot.
And then once you have that number clearly stated, you can say, now it's time for me to approach investors that are now, are not interested in scaling. One question that has been on my mind, you don't have to have the answer, it could just be a conversation as well, is that a lot of Nigerian startups, we have seen a decline. I don't have the numbers, but in the past 3 years, every single month or another month, we see a story of like foreign expansion, right? But now I haven't noticed continuous expansion outside of Africa. Good news, Chowdeck is expanding, is now in Ghana. We have a lot of startups that should have the capacity. I personally feel you should be out of Nigeria by now, but what are you still doing here, right? Once you cross your 50th year, in my opinion, as a startup in Nigeria, you should be considering Ghana or Kenya or somewhere else.
Yeah.
You know, what do you see being an hindrance to that?
So I think, first of all, we have a mindset. Let's start with that. The mindset we all have, and it took me a while to kind of filter that properly. And it's good in some contexts, especially when you've lived globally and you interact with a few people, is people tend to think of it as Africa and Nigeria is a very massive market, which is true. So sometimes people question, what is the point? In developed countries, you have some of these solutions fully functional and very stable. So if you want to break through those markets, then you have to deal with the competition. But think of it as your local hero here. You're very stable. You have some of all these things figured out. It's going to take you maybe, and it also can be data too. If you think at it. So think of it as, let's say, if you're going to expand across multiple countries within Africa, you're going to maybe just take 2x of your resources, right? Don't forget, is the already existing infrastructure, customer base, maybe fundraising that you've gotten that you're going to use to break through. So when you look at it and you feel like, you know what, this problem is unique here and it doesn't happen, like there's no solution here, and you're only going to just need maybe 2x of your resources to solve it. So you focus on that. But let's say if you want to do the same thing in, let's say, Lisbon, Portugal, or in London, you're probably going to be burning through maybe 5x or 6x of that. And then you question why? Why do I need to do that? So why I believe that I want to believe that some people choose that route from a data-driven number standpoint. However, there's also the reality of we can get too comfortable within our zone, right? And just feel like there's no need. We're already racking up billions in revenue through whatever it is we're doing, and there's no need to bother about doing that. Investors feel satisfied, so why stress?
There's an investor I was speaking to in Lagos and said a lot of the fintechs we have in the market right now are glorified MFPs with the app. And he was saying it's just a lot of hangers. Like he said, the days of hunger to grow, growth come at its cost.
Yeah.
Right. But once you figure out the part of the business that can scale and you figure out the market, like according to him, founders go to Tanzania for holiday. They sit up in Namibia tomorrow, riding the Namibia, the desert and having fun. Well, what do we want to see more is founders saying that we are doing well in Nigeria. We've grown to 250,000 customers, 200 plus customers. Let me go and spend 2 weeks in Tanzania and see if we have
an opportunity
there.
True.
Let me go and spend a week or so in Kenya and see if we have an opportunity there, and then see what part of the business we can implement that. We don't have to implement the whole product. We can implement the business in bits and pieces.
Interestingly, it doesn't always have to even be expanding the existing business, right? You can think of what's another arm that we can possibly even consider acquiring that is very viable and important to that particular community or that location or that, that industry, that is relatable to what you do. And that becomes, so think about the way Slack, the relationship between, for example, GoDaddy and MailChimp, right? I think that's a more perfect example. So independent companies, but some of the acquisition comes because they end up building an ecosystem around what they do, but it's also very important. So I think that hunger doesn't always necessarily have to be the primary product. It can be vertical products still owned by the same company that become more viable across various locations. I also think most times when people look at some of these things, it's also the fear, because it always feels like you're starting again. So there's also the fear of having to, go from scratch, because you're literally trying to create a whole system that wasn't existing. Yes, you have capital now, you have some level of strong database to do what you want to do, but realistically, you're still going to be doing it over again. So I think the hunger is the most important part that can always drive those kind of things. If else, the person will be in the comfort zone.
Yeah, the same investor said, we now have lifestyle startup founders, right? The goal is 50,000 customers or 100,000 customers. If we hit 100,000 customers like this, we are done. I mean, we have made it. And the way you put it is like, and then we don't see continuous demand, but forgetting that the investor is praying every morning when he's saying, "Our Father who art in heaven, let me see 10x as we're approaching our 10th year." And the founder is right there. They I've blown, see the revenue we're making every single month. And how do you think a founder should have this mentality to marry that relationship, knowing that my investor is somewhere expecting it 10x? My job may not be to deliver 10x. My job is to deliver to my customers.
Yeah.
But what mindset do I need to have to balance that relationship with my investor's expectation and my customer expectation, and also my life, to have work-life balance so I will not die in the process?
So I think the better way to think of it first is founders need to be able to think around building beyond just themselves. Because I think that's where it helps. So if you're thinking around certain things and you've aimed some level of satisfaction, then you start getting really comfortable. But when you understand that, it's very possible for me to grow this company to a point that I can step away, or I can grow to a point that, it outlives me, or I can pursue some other thing of interest and someone else can take over that position. That's how we have the likes of Illumilu. And so growing, not necessarily startup in this case, but of course, in terms of growing businesses to a certain point and then having other people come in. So, because what you're doing is you're creating a very long, wild gap of growth. So for me, it's not really just even thinking about investors. While it's good to always put them into context, it's a very important part, but you can even think beyond them, because invariably they will be served.
Yes.
Right? When you think beyond them, they would definitely be served. They'll be definitely happy, but you're also focusing a whole lot on the bigger picture of both the business itself, the customers, yourself, and your building legacy.
One important thing I have noticed that I've not seen a lot of Nigerian startup founders after 5 years say, you know what, I am not a manager. I this is who I am. So let me step down for someone else. To take over the position of being a CEO, and let me go to be like an executive chairman or something, and think about the next thing, or think about where do we need to go to, how do we need to scale these things and stuff like that. Why do you think we haven't seen such decisions? Like, for example, as a founder, have you ever thought about it?
That's what we did with Hemdo.
Oh, really?
I did step away. So while I maintain some level of oversight, right?
Sure.
But on a day-to-day basis, I've stepped away.
What was the mental space that made you make that decision?
It started with, first of all, the fact that I wanted to. You won't believe this. Well, you should believe this. I want to make money while I sleep. Right? Because Hemdo was heavily centered around being a service-based business.
Yeah.
We're the backbone of many businesses. Then we're building infrastructures. We're building for ambitious founders. We're building websites. We dabbled a little bit into call marketing, what your typical digital agency would do.
Yeah.
We then slimmed down a bit. We trimmed down most of our operations strictly now to just technology. But first I was looking at signing off from writing code. So that's how we started. And I was like, there's no way I'm signing off from doing this thing and there's not going to be a proper structured process around how this business is going to scale. Without me being involved, right? I can be great at it, but there's no way we can service 10 parallel customers that have very important dreams that we need to build.
Yeah.
So I needed to start thinking around, again, having the right team on it. But then having the right team is just one thing, but also having the right management, and having people. So think of it as we literally had to mold the right people for more than a year, just to be able to have that level. Again, it's not just an experience standpoint. It's also ensuring that you don't have to go back and take that job again, right? Because you might just
failure. Like, I have to go and do this.
Because when you basically sign off, it doesn't just end there. Because sign off is one thing, but is the person amplifying whatever it is you're doing, or they're just keeping it steady? So there's always a couple of things we had to look at. And for us, that's kind of that trajectory took. So first, I needed to be able to say, you know what, I want to buy time. So time was like, first of all, the major idea, time and money. But then I had this restless drive to say, you know what, BrandDrive needed to be formed. I was doing it from a consulting standpoint, just looking at people's data, and it wasn't making sense that this was going to be a sustainable method of doing this long term. So we need to morph it into a product. So yeah, that's and here we are, 3 years after.
And it's been actually been a very good decision.
Yes, it is one of the best I made for my life.
What for a founder in the fintech space? We're back to fintech again. For a founder in the fintech space, looking to scale, looking to grow, looking to actually offer real value.
Yeah.
What would you say from your experience of 3 years of BrandDrive is something you should focus on most of the time?
Focus on still the data. Like I would want to say focus on your customers, but focus on your customer data. Let's put it that way. So while you want to focus on what's happening within the business, right? There are a number of very key value points, but the data will kind of give you clarity on every other thing, and then you can address them. So for example, if your data is clearly telling you that you're burning, so let's assume you're having talents within the company. You're burning through maybe $500,000 on maybe a single talent, or maybe 250, depending on whatever the figure anyone is doing, right? Every single month, and you're racking up millions every single month, but you're not delivering. There's nothing viable coming out of your team. That's a data standpoint for you to examine or reevaluate your team. The problem might not necessarily be the talents and their expertise. It might be a culture problem. So you want to start looking at a few of those things. Personally, we had an incident within our company where we had almost an 80% lateness. We did morph into some form of hybrid, where you have some days you work. We initially started out, it was full-time, Monday to Friday, and then we morphed into a hybrid. And then we clearly just saw that a high number of individuals were coming very late to work. So if you're starting your day very late, when do you pick up the things you need to do? And before you know it, the day is gone. And then we had to track back, and we saw that it wasn't really just an attendance problem. It was literally a culture problem. So we needed to fix that properly. And having done that, it's been the best decision. So we're literally having like a 1 year after that now. We're looking at that about 3 months ago. And we're saying we can't believe that now we have literally about, I think, just a 3 to 4% lateness, right? How do you make that tremendous shift if you're not looking? So for me, data basically plays a major role in a lot of variables that you want to look at. Of course, you want to look at the customers as well, but the data would narrate what's wrong, what's working, and you want to know the places you want to amplify. You also want to know the places that you want to make specific modifications when necessary. For us, for example, we weren't so big on investing on hardware for our teams initially. Maybe a few key personnels within the team, but at some point we noticed that when we started doing that, it was ensuring good efficiency within these team members. So quickly, what we just made as a standard policy was once anyone comes in, you're getting a MacBook or you're getting this, right? Or depending on, again, a few roles will probably not get the MacBook, but almost every other person would get a MacBook. And that for us, what that did was ensure that you're definitely having the right people doing the right job. They're empowered to do what they need to do. So it can be it can be a number of things, right? It could be customer, it could be even your revenue, right? But once you focus on the data, you can see clearly.
Yeah, it's just like the story of the entrepreneur that with the data, I said, how am I making 50 million a month?
You get.
And then it became clear that my loan request of 20 million isn't like feasible
Such a
because
big deal.
I could literally extract more from my business if I knew
what was going on. True.
Thank you so much.
Thank you.
It's been
Happy
a pleasure.
to be here.
It's been a pleasure having this conversation. There's a lot I wanted us to talk about, but I'm sure we can have the time to come back again and
absolutely
continue the
looking forward to the conversation.